Hello everyone, welcome to RBI 247 sessions. Welcome to Anuj Jindal. My name is Davinder and today we will cover some finance current affairs news. Let's just discuss the finance current affairs news one by one. First, tell me and give me a thumbs up whether we are good with the audio and the visual of the video. Can you hear me properly? Can you see the PPTs? Okay. So let's start our session soon, very quickly, so that we do not waste our time. And here we are with our today's news. Today we will discuss these three news plus these two news today. Let's start with the first news, which says NPCI extends UPI market share cap deadline to 2026. Now this news is very simple. NPCI, what is NPCI? NPCI is a umbrella organization, right? This is an umbrella organization that was released by the RBI, okay, to boost the financial services accessibility and make it more efficient in the India. So main agenda of this organization is to boost the digital payment services and increase its efficiency. Hence, this NPCI released this rule in 2020. The compliance of this rule has been extended to what? To 2026, right? First, we will read about this rule and then we will see some points regarding the NPCI and some other points as well. So let's have a look at the news. So recently NPCI, that is National Payment Corporation of India, extended the deadline to enforce the 30% transaction volume cap for UPI apps like PhonePe and Google Pay. We all know that UPI transactions are being at their all-time low volume, and there are only few third-party UPI applications that are being dominant in covering this transaction volume. So NPCI, in order to maintain the diversification of these transaction volume among the key third-party applications, right, to avoid the dominance of few UPI applications in the UPI transaction, hence a cap has been set, a limit has been set by the NPCI on these applications so that there is no key dominance of few or one or two applications in the UPI market. So as we can see, the PhonePe and the Google Pay has majority of the users base with them, and hence they have dominance in the market in terms of UPI transaction. Hence, to avoid that dominance, the 30% cap has been set by the NPCI. This rule was first introduced by NPCI in 2020. Okay, now this deadline has been extended to December 31st, 2026. Let's discuss what we have in this news. So why such decision has been made? I already told you that market dominance, to avoid such market dominance, the rule has been implemented. Currently, PhonePe and Google Pay hold 85% of the UPI transactions. Okay, now what are the limitations of having market dominance? If there are few players who are dominating the UPI transaction volume, they can charge you high rupees, they can charge you high fees for the same. However, there are no such fees currently charged by the UPI application. But if this dominance increases substantially, they may charge you, right? To avoid such condition or to avoid such circumstances, there has been a rule implemented by NPCI. Okay, the UPI recorded 155.44 billion transaction in 2024. Very important data. So here this indicates that there has been a 32.2% surge from the transaction volume in 2023, and hence there is a need to diversify the transaction volume among various third party UPI applications, right? And this rule also ensures that there is a fair competition in the long run. Now we know that there are number of participants in the third party applications of UPI, such as Amazon Pay. We also have WhatsApp Pay and Bheem Pay, but only few are being currently dominant in the marketplace, and hence to ensure that there is a fair competition in the market in the long run, this rule has been implemented. Okay, the extension will give more time to adjust without disrupting the system. Now this has been the third time that NPCI has extended this deadline. So why they have extended this? The agenda is to ensure that the system of UPI payments is not disrupted significantly, and to avoid such disruption to the users and providing them inconvenience. So hence this deadline has been extended. So this picture right here explain you the the timeline of the rule that has been extended, how many number of times it has been extended. So first, as I told you, it was introduced in November 2022. This 30% cap limit was first introduced in 2020, and then it was extended in December 2022 to it was extended at to December 31 2024. Okay, and now as per the recent announcement, the deadline has been further extended to December 31st 2026. This date is important, and this date is also important, so remember these dates. This can be asked in your examination. Okay, so this picture shows you some facts about the NPCI. Okay, now NPCI is a very important organization that was released or established by the RBI and IBA, that is Indian Banking Association, in 2008. So any fact that is relevant related to the NPCI can be asked in your examination as general knowledge. So you must know the facts about the NPCI. Hence, we are discussing it here very shortly. So NPCI throughout its tenure acquired only one company, that is NFS. We will read about this in the next slide, and this was takeover from IBRBT. We will also read about this in 2010. So we will read about this in the next slide. Till then, we will discuss some initiative that has been taken by the NPCI. You can see the UPI, NPCI, BBPS, Bheem Pay. All these are the initiatives that NPCI has taken throughout its tenure from the establishment, right? So hence these initiatives are very important. There could be a descriptive question you can expect from this, like what all are the initiatives of NPCI. Discuss the initiatives taken by NPCI and some facts about the NPCI. So this is a very important information for you. So we were discussing that NPCI has taken over NFS, that is National Financial Switch, and from the Institute for Development and Research in Banking Technology. As the name suggests you, this is an institution that take care of the research in the banking technology. This introduced NFS, that is National Financial Switch. Okay, and this institution was released by the RBI. Now NFS was taken over by NPCI in 2010, right? Now what this organization do? This facilitate ATM interconnectivity, bank connectivity, customers access, and account access. What do I mean with that? That means if I have a SBI account, I can go to HDFC ATM to take or withdraw my money. So this facility, this connectivity of ATM, this bank connectivity was facilitated by the National Financial Switch. Okay, so this was taken over by the NPCI in 2010. I hope you will remember this. Okay, this is a very important fact. Okay, so we are done with the first news. Now we are coming to the next news, or the second news of the session, which says that RBI introduces name lookup facility. Okay, for NEFT and RTGS. Now what is NEFT and RTGS? These are two payment methods. Okay, these are nothing but two payment methods like UPI and IMPS. Okay, now what is this facility? This facility says as we make payment through UPI or IMPS, we can see the name of the beneficiary in the interface, in the payment interface, right? So this ensures that we are sending money to the right person. This is also a kind of checkpoint that we make before we make a payment to any person. So this facility was available in UPI and IMPS but was not available in the NEFT and RTGS payment. Okay, so hence RBI here has proposed that the name of the beneficiary, the lookup facility, the name lookup facility in the RTGS and NEFT will be provided so that there are incorrect money transfers can be avoided, right? The main agenda is to avoid that there is no incorrect money transfers. So there must be a number of cases where people have incorrectly sent money to the wrong beneficiary, and hence this proposal has been made by the RBI. Now we will, before we go to the what we mean by the NEFT and RTGS, we will learn some other facts about this news, that no additional charges will be charged. No additional charges will be charged by any banker for this facility. Okay, so no charges will be applied on this facility, and the name of the beneficiary will be retrieved from where? From the bank's core banking solution. Now what do I mean by this? This means that the centralized system of a particular bank. Okay, now the centralized system of the bank, the information of the beneficiary will be taken from here, so that one can check the account details along with the name of the beneficiary, right? The third point says that all banks have to implement such facility from April 1, 2025. So this is a deadline given by RBI to the banks. So this is a very important information. Okay, you must remember this. Now we are discussing NEFT and RTGS. Now, as I told you, these are two payment methods. Now let's just differentiate between both of them while also learning about their features. Okay, let's just discuss this. Launch year is, this was RTGS is a real-time gross payment system. This was launched in March 2004, whereas NEFT was launched in November 2005. Okay, now what is the purpose? Of RTGS? RTGS allow you to make large payments in real time. You can send the large payments at a real time, that is, money is transferred quickly as compared to NEFT, wherein transfer of small to medium amount of money is being transferred. Okay, now what is the settlement type? How settlement has been made in both of the payment methods. In the RTGS, the transactions are settled individually. Now one by one, each and every transaction or each and every money will be transferred or settled, wherein in NEFT the transactions are settled in batches at specific intervals. Now let's take an example for this, like how the transaction has been made in the batches. Suppose there is a company named as A Limited. They want to send the salaries, all the salaries to the accounts of their employees, right? Now this is a bunch of salaries. Now this is a bunch of transaction that is to be made. Now the batches of this transaction will be made, and within a few intervals these batches will be this transaction batches will be released or settled timely, okay, in a specific interval. So this is the main agenda behind having the NEFT and RTGS. Now the minimum, this is a very important fact, the minimum transfer amount here in RTGS is 2 lakh. So this is, we already know that this is for the large payments. How much large payments? 2 lakhs, and there is no maximum limit. So minimum of 2 lakh of rupees of payment has to be made for the RTGS. Okay, so the minimum amount that can be transferred through RTGS. But in NEFT, there is no minimum, no such minimum amount. It can be of any amount. Okay, availability. This is available in 24/7, 365 days, and this is also available 24/7, 365 days from December 16, 2019. Okay, now what is the typical use of this? The typical use of this is high value payments. Okay, this can be not just for the banks, it can be used for individuals as well. A person who want to send money for more than 2 lakh can use this RTGS payment method. Individuals, companies and banks can also use this payment method. And typical use of NEFT is day-to-day individual corporate transaction that can be taken by anyone. This can also be taken by the banks for making bunch of payments for their customers. Okay, I hope the difference between the NEFT and RTGS has been clear to you through this slide. Now we will move to third news of the day, which says that RBI keeps floating rate saving bonds rate unchanged. Okay, now the news is about the bonds, these bonds and its interest rate. Now RBI sets this interest rates of bonds. Okay, this time they haven't changed this interest rate, right? They have kept it at 8.05%. Okay, now how this percentage is being decided? This is being decided by taking the prevailing interest rate in NSC, that is National Savings Certificate. We will read about this, what is NSC, and additional fixed spread of 0.35. Okay, 35%. Now combining or accumulating these two rates, the interest rates of floating rate saving bonds is decided here. Now for now you can read it at the FRSB are the government bonds. For your understanding, these are, what are these? These are government bonds that are issued by the RBI. This was first issued in 2022 and interest earned on this are taxable. Okay, the bonds interest rates changes every 6 months. Okay, so there has been a 6 month on this, and now the RBI has changed, revised the interest rates of this bonds. Okay, so the RBI announced that the interest rate for FRSP 2020T from January 1 to June 30, 2025 will stay at 8.05%. I hope this is clear with you. Let's start with FRSP. Now what are these bonds? I have already told you that these are bonds that are backed by the government of India but are issued by the RBI. These are 100% safe bonds. That means the returns and the principal, the risk of this is 0%. All right, you can these principal and the returns are totally safe in this case. Okay, so the interests are taxable. We already know this, and the TDS applies if interest rates exceeds 10,000. If one is earning more than 10,000 of the interest on these bonds, the TDS, that the tax deducted on source, will be applied on that income. Okay, the third point says that bonds have minimum investment of 1,000 rupee and there is no upper limit. So the minimum investment that can be invested in FRSPs are 1,000 rupees and there is no limit on that, and the lock-in period is 7 years. But for senior citizens there are different kind of lock-in period. Suppose a person of between 60 to 70 years can take back their bonds, withdraw their bonds in after 6 years itself, because for a normal person the lock-in period is for 7 years. Okay, for 70 to 80 they can withdraw after 5 years, and as the age increases they can withdraw the bonds earlier, that is 4 years in case of 80 years of Okay. RBI revises the interest rates twice. We have already learned this on January 1 and July 1. These bonds cannot be sold in the secondary market. Very important. These bonds cannot be sold in the secondary market. They are primarily issued and they cannot be traded on the secondary market. Okay. I hope the features of the FRSP are clear to you. Okay. Now let's discuss about the NSC. Okay. NSC is a fixed income post office savings scheme. So this is a scheme like FD, like we used to have a FD, fixed deposit in a normal bank. This has all the features like such, and there are some points where the features are differentiated between the fixed deposits. Hence we have discussed here very shortly. Okay, so NSC is a post office savings scheme that was introduced by Government of India. All right, the lock-in period of this is 5 years. Okay, so in case of fixed deposits, the lock-in period is also for a fixed tenure, but you can still break it. The FD can be you can still access the money in the fixed deposits by paying some penalty. But in this case, this lock-in period is for 5 years and you cannot extend it and you cannot break it in between, or that means the money stored in this NSC scheme cannot be taken out or withdrawn within 5 years. Okay, so the lock-in period is 5 years and one cannot extend this tenure. If they want to extend this tenure, they have to start another scheme with it. Okay, with the post office. They cannot extend it. Once it's ended. You have to start again with the another NSC certificate. Okay. The minimum investment that is required in NSC is 100 rupees and there is no upper limit as per now. Okay. The interest for the NSC has been compounded annually. In the fixed deposits, what's happened that you get the interest on your fixed deposit on a monthly basis. But in this case, that is National Savings Certificate, in this you will get the amount after 5 years of tenure. You won't get on a monthly basis, on a yearly basis, or on a half yearly basis. You will get all the year accumulated or compounded interest with your principal after the fifth year. Okay, as what do I mean by when I say compounded annually? That is the interest rate that you have earned for that particular period will be reinvested for the next year, and the interest on that will be compounded on a yearly basis. Okay, now what are the benefits that we get on NSC? That one can get a benefit of tax deduction under ATC. Okay, the maximum amount that one can get from ATC deduction is 1.5 lakh, the ATC of income tax. So there are benefits attached to NSC. Okay, so these were the features of NSC, National Savings Certificate. Okay, I hope this is clear to you. Now we will move to fourth news, that is government forms working group to revise WPI. Let's see, is everything fine with the session? Okay, what the news says that government formed a working group. Okay, they have formed a group for what? The agenda of forming the group is to revise the WPI, that wholesale price index. Okay, recently government has constituted 18 members are there in the working group that is chaired by the Niti Aayog member, that is Ramesh. Very important fact that it is a 18 member group, and second, it is being led by this is being chaired by Niti Aayog, a member, that is Ramesh Chand. Okay, and what is the agenda of forming such committee is to revise the wholesale price index base year. Okay, the base year currently is 2011-2012, but this need to be revised to 2022 to 2023, and the final report of the discussion will be sent to the Office of Economic Advisor. Okay, now what is wholesale price index? Now this wholesale price index is the average price of wholesale goods. Okay, wholesale goods. Okay. these do not involve services. Okay, this index do not involve services. Okay, we will read about this in detail in our this slide. Okay, so wholesale price index includes commodities like food products, fuel, and manufactured goods. Okay, so the current base year is 2011 to 2012, but there is a need to revise them. We will see why we need to revise them. Okay, in the next slide, first we will discuss what is WPI. So scope of this is to include the raw materials, semi-finished goods, and finished goods. So agenda of this is producers use this WPI to see what is the change in the price of wholesale goods, because they are the one who buy wholesale products, right, for their businesses. So this WPI serves this purpose for them. So purpose is to inflation monitoring, how much change has been executed so far in the prices of wholesale products, and this WPI is also used in monetary policy committee as well. They also consider WPI, CPI in their decision making of MPC, right? So WPI covers 697 approx 697 items in the basket. So there is a basket containing different kind of products. Containing all that products, the inflation in their prices has been ascertained, or the change in the prices has been ascertained using this. So this basket includes broadly what kind of things. First is primary articles, that is food articles, non-food articles, then fuel and power, which include total of 16 items, and then manufactured products, that is 564 items approximately. Okay, now why there is a need to revise the WPI? So the current economic condition has been changed, the inflation rate has been changed, and there is a change in the production and consumption pattern. Hence, there is a need to revise the WPI. Okay, and what is the other reason? That inflation measurement. There is a need to update the weights and items in the basket, ensuring inflation measurement is precise and more relevant. So there is a need to look at the basket, what things we have in the basket, and there is a need to add more or delete some of the products from this basket, so as to make the inflation measurement more accurate and reliable for the NPC as well, and for the producers as well, right? And another reason is for policy formulation. The policy makers, that is the MPC, RBI conducted monetary policy MPC on a bi-monthly basis, right? They rely on this index, they rely on the numbers released by the WPI, and hence there is a need to redesign such index in order to make the monetary and fiscal policies more reliant and applicable as well. So hence there is a need to update WPI. Okay, now what the group is responsible for? The group will review the current pricing system, like how things are priced right now, how much products has been added to the basket, and there is a need to add or delete some products. There is a need to enhance the accuracy of the inflation measurement, okay, and suggest the improvements if we have in the WPI index. Okay, I hope this news was not so technical, very simple news. Okay, now we will discuss the last news of our session, wherein the RBIH, that is the fully owned subsidiary of the RBI, okay, that is Reserve Bank Innovation Hub, launched what? Swanari TechSprint 3.0. Okay, we will read about this program. What is this program? Okay, so recently RBIH, in a partnership with IIMA Ventures, it is the Ahmedabad startup incubator, both have partnered, have done partnership with each other to launch this program. Here, the agenda of the program is to support the fintech startup. Now, what is fintech? Fintech is made up of two words, that is financial technology. Okay, so the agenda of fintech is to use technology to make the financial services more accessible to the general public and make it more convenient for the users to use it. All right. So the fintech startups helps in doing that. So the agenda of the program is to support these fintech startups so that they create a solution. They create a solution that empowers or help women to access the financial services. So the main agenda here is to empower the women's, right? Empowers the women's so that they can access the financial services in a better way. Okay, this is the whole agenda of the program. Now this program targets whom? They targets three group of women. First is women self-help group, that is a community, that is the informal community that has been created by the women. Okay, so the program will provide support to the women self-help group. They will also provide support to the women-owned MSMEs, the MSMEs, small medium startups that are being owned by the women. Okay, and the women street vendors, that is the informal businesses run by the women. So this program targets these three group of people here. Okay, so how will they support it? How will they support them? They will support them by giving them opportunity for scaling up the growth. For this, they will grant some funds to them, and they will also provide their advice, their expert advice for their startup company, so that they can, increase their scaling of startup. Okay, so there is a potential for business growth and expansion. The main agenda is to increase their potential for business growth and expand the MSMEs of women. Okay, so who all are eligible? Very important. Who all are eligible for this program? So a startup company with minimum viable product. Now what do I mean with MVP? That means a startup company which have their product, have a basic version of their product with them, will be eligible for the program. Now what do I mean with that? That means that this idea of the startup must not be on papers, right? The concept should not be on paper. The startup should be in a stage where the basic product is in hands. Okay, we can see the idea or the solution of the product in your hand, right? So MVP, a startup with the MVP is eligible for this program. Second, funding stage. Now what should be the funding stage of the startup? A startup company should be in a funding stage of pre-seed and pre-series A seed stage. Now what do I mean with pre-seed? That means the initial investment hasn't been made yet. That means the startup companies are very risky. Initial investment are not being made yet. That means a significant amount of investment has not been made yet, so that it grows substantially, and hence this is a pre-seed stage of funding. Okay, now what do we mean by pre-series A stage? That means a large amount of money hasn't been spent. A large amount of money haven't been spent yet on startup. Okay, by any company. Okay, so this is the initial investment, very initial investment at the point of its introduction stage, and this is a stage where no large investment has been made by any of the company. Okay, so these two kinds of startup companies are eligible for this program. So you will remember that the main agenda of this program is to empower the women, women and the MSMEs that are being owned by the women. Now we are done with the news. We will quickly start our question answer sessions here. So our first question is, NPCI has extended the deadline for implementing the 30% transaction volume cap of UPI apps. What is the new deadline set by NPCI? When was the 30% cap on UPI transaction volume first proposed by the NPCI? So there are two questions. First, they are asking about the new deadline that has been set by the NPCI, and when was the rule was implemented by the NPCI. Okay, so there are 5 options in front of us. First is December 31st, 2025, November 2022. This is incorrect. December 31st, 2027, and this introduction was made in November 2022. This is incorrect. December 31st, 2026, and start was November 2021. This is incorrect. December 31st, 2028, and November 2018. This is also incorrect. So the E option is the correct option. December 31st, 2026 and November 2020. So option E is the correct answer. Okay. Let's move to second question of the session. Recently, RBI proposed introducing a beneficiary account name lookup facility for the RTGS and NEFT system. Okay, the newly proposed beneficiary account name lookup facility for RTGS and NEFT will help to. So here they are asking the purpose of such facility. Now let's see the option. The first option says to increase the transaction fees for the remitter. No, this is not the purpose of the name lookup facility. The B option says to reduce the number of incorrect fund transfer. C option says allow fund transfer from PPI to bank account. No, this is a normal. This is not a feature of the news, and make it compulsory for banks to authenticate transaction. This is also incorrect. Limit access to RTGS and NET for non-KYC account. This is not a right option. So the right option is option B. Okay, let's move to the third question. It says the RBI has proposed introducing a beneficiary account name lookup facility for RTGS and NEFT system, allowing remitters to verify the beneficiary name before completing the transaction, similar to the feature already available in UPI and IMPS. IMPS is immediate payment service. Okay, which of the following statement about the real-time gross settlement system is incorrect? All right, so this is a static question. This is a question that has been asked from the features of RTGS. Let's see the options. The first option says RTGS is used for transferring high value amount between the banks. So what we have to find? We have to find the incorrect statement about the RTGS. Let's read the options. RTGS transactions are settled in batches at the end of the day. RTGS is available 24/7, 365 days a year. RTGS settlement settles transaction individually in real time. This is also correct. RTGS system was introduced by RBI in March 2004. So what is the incorrect statement regarding the RTGS? So option A is the correct answer. That means this is not for high value amount between the banks. Okay. Question number 4. The government has formed an 18-member working group to revise the whole price index base year. What is the proposed base year for the revised WPI? So we all know that a 18-member committee or group has been formed by the government to revise the WPI. Now what year has been proposed as a base year as per the WPI, revised WPI? So the options are 2004, 2005, 2011, 2012, 2017-18, 2020-21, 2020-22, 23. Now what is the correct answer here? Okay, so the correct answer is option E. Question number 5. The RBI recently announced the interest rate for floating rate saving bonds 2020, which are taxable for the period from January 1 to January 30, 25. What is the announced interest rate for this period? Now, they have asked you the current question, that is what is the interest rate set by the RBI in this case. So the options are 7.5%, 7.7%, 8.05%, 8.35% and 8.5%. Now what is the correct answer? So the correct answer is 8.05% is the correct answer, right? Let's move ahead. This is the last question of our session, which says the Swanari TechSprint 3.0 program is launched by RBIH and IIMA Ventures, which aims to support the fintech startup that develop the solution to help women access the financial services. What is the target group for this program? This program targets which group? Which group of the Indian economy? Let's see. Option number A, women self-help group, women owned MSME and women street vendors. B option, women in rural areas, women employees in public sector, women in agriculture. C option, women in education, women in manufacturing, women in healthcare, women in finance, women in entrepreneurs, women professionals, women in technology, women in marketing and women in sports. What do you think? What is the right answer? Okay, so option A is the right answer. Okay, right, Pratiksha, right, you are right. So here we are done with our today's session. I hope you liked our session. I hope this session was fruitful for you. So here we are ending this session now. We will conduct our session again on Thursday at 5 p.m. We conduct our RBI 247 sessions in 3 days in a week, that is Tuesday, Thursday and Saturday. I hope you have liked the session. We will meet until next session. Till then, bye bye and best of luck for your exams. Okay. Let's have a doubt. In case you have any doubt, you can ask me. Kindly discuss third question again. Do you want me to discuss third question again? Okay. Let me check. Okay. Discussing it. Okay. So the right option in this is RTGS. RTGS are settled in batches. It is not settled in batches. It is a real-time payment system. So the first option is correct regarding the RTGS. And as for the question, the wrong feature that has been stated in the option is option B. That is RTGS transactions are settled in the batches at the end of the day. I hope it is clear now. Okay, I think we are done with the question sessions now and the doubt session as well. Okay, thank you everyone. Thank you for this session and thank you for being so participating in our session. Thank you for the session. Okay.